Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. If you want 5 free stocks, Webull is going to give you 5 free stocks when you open a new Webull brokerage account. Deposit at least 1 penny in that brokerage account. They're going to give you 5 free stocks valued up to $9,600, guys. So after the video, click on that link in the description box of this video. Open up your new Webull account today and go get that free stock and go get that free money. Well, guys, in today's video, I want to talk about why Wells Fargo's head of global strategic investing says you should not be buying the dip. Now, there are several reasons why this Wells Fargo investment guy is advising against buying the dip. The main reason is due to inflation. We already know inflation is around 7.5%, and we need to do something about that as a country. And I think we're headed in that right direction of doing something about it. But here's what this guy from Wells Fargo is thinking. With the Russia-Ukraine situation, and with Russia being really a superpower when it comes to oil production and controlling the supply of oil in the world, since they're the 3rd largest producer of oil in the world, they also are a major player when it comes to computer chips, the material used to create computer chips. So is Ukraine. Now, of course, with Russia starting its march into Ukraine, they may decide, you know something? If you guys don't want to cooperate, world, we will hold our supply of oil. And what does that do to oil? Increases the prices. And what happens when prices increase of our goods and services? Inflation goes up. See, oil already is near $100 a barrel. If Russia decides, no, you guys not playing fair in the world, we want to take over Ukraine and you're not going to let us do it willingly, we're going to hold our supply of oil. And guys, with them being the 3rd largest producer of oil in the world, that's going to continue to drive up oil prices, which in turn can continue to drive up inflation in the United States, right? And around the world. So that's one reason why the guy at Wells Fargo says, don't buy the dip. One is because inflation. We're not sure if inflation is going to keep going up. The second reason he says not to buy the dip is because of fear and uncertainty. See, anytime there's fear and uncertainty in the market, investors, whether that be retail investors or institutional investors, they pull their money back from the stock market and just kind of hold it until they can get a better understanding of what's going on or what will be happening in the near future. He's saying, don't buy the dip, but if you currently have investments in the stock market, hold them. Don't pull them out, hold them. Just don't buy any more. And then he's saying, keep your cash on the sideline until we can figure out this inflation thing. We can figure out this Russia-Ukraine thing. Nobody knows really where the real bottom is. And I've been saying that in the last several videos, guys. We don't know where the bottom is. But I think, this is just my opinion. See, I think this is how the 1% control all the wealth in the world, right? Especially in the United States. We get talking heads like this, head of investments or whatever his title is at Wells Fargo. We get guys like that telling retail investors like you and I to be afraid, don't invest, keep your money out of the market. And all along, guess what the 1% are doing? They're doing the opposite. They are buying as much as they can right now. I mean, they are doubling down right now. Why? Because they understand the history of the stock market. See, the stock market is not going to be down for long. inflation is not going to be 7.5% forever, right? Russia is going to pull back at some point and resume life as it was before they tried to invade Ukraine. Russia will pull back at some point because Russia can't be out there by themselves on a worldwide stage where all the fingers are being pointed at them. They can't do that. Right? So they can't do that forever. At some point, Russia will pull back. Ukraine will continue to be its own separate country, independent. It will pull back at some point when Russia gets whatever they're trying to get. See, the thing with, in my opinion, with Russia and Ukraine is Russia has an agenda. And once they get the things that they have asked for, at some point, some type of compromise, they will pull back, right? So I don't think that is going to be a long-term thing. And again, guys, that's just my opinion. And it's sad that it's happening, but sad things happen all the time in this world. Sad things happen to good people. Bad things happen to good people. So we just have to understand that. But back to this situation of hold your money on the sideline, keep it in the bank, don't invest it. Oh, don't try to buy the dip because we don't know what the bottom is. It ain't about knowing where the bottom is. What it's about is understanding that why these your favorite companies and your favorite ETFs are on sale. This is when you should be going in and buying them at a discount. And then if you hold them 18, 24, 36 months, I guarantee you, based on history, your net worth will increase. See, that's what the wealthy are doing. They're doubling down on the market right now. But what they're doing is not putting every dollar in at the same time. They're buying the dip on the way down. I've talked about this in other videos. So let me give you a quick example. If I got $1,000 and I want to put $1,000 in the stock market, I want to buy the dip. See, I don't take my full $1,000 and just boom, put it in at one time. No, what I do is I say, well, okay, I got $1,000. I'm going to take the next 10 market days, the next 10 trading days, and then I'm going to take $100 every trading day, every day the market is red or down, and then I'm going to buy $100 worth of my favorite companies and my favorite ETFs for 10 trading days. That's how you do it, guys. That's how the 1% does it. They don't just take their full $1,000 and just plump it in, not really knowing what's going on. No, they take that money and they spread it out over a number of trading days. And every time the market is red, every time stocks are down, right? Every time their favorite ETF is down, they buy a little bit, they buy a little bit, they buy a little bit. And that's what we should be doing right now as retail investors, right? We should be buying the dip, but we should be buying it on the way down. We should be buying it every single day, little by little. Every time the market is red, we're buying our favorite companies. We're buying our favorite ETFs. And we got to have a long time hold pattern though, guys. We can't be short term on this. Now, I do agree with him on that. We cannot be short term. If you're short term with your money that you got, if you have a short term investment period, keep your money in the bank, right? Because we don't know if this thing is going to be turned around in 6 months or 12 months. It could be 18, 24, 36 months before we're back to where we were prior to this Russia-Ukraine invasion, back to where we were prior to inflation getting out of control, and back to where we were prior to the Federal Reserve threatening to increase interest rates, which do what? Decrease temporarily the stock market, right? It decreases the stock market temporarily when the Federal Reserve raises interest rates, right? Because I talked about that. When you raise interest rates, banks raise interest rates too, but they raise interest rates on checking accounts, savings accounts, money market accounts, CDs, right? Because if banks can raise interest rates and charge people more for loans, they also will raise interest rates. Why? To attract more money that they can use to lend out to people to make money. See, that's how banks work. They take your money, they lend it out, and they make money off of it. But in order for you to be enticed to give them your money, they're going to raise interest rates as well on CDs, money markets, savings accounts, and checking accounts, right? They're going to do that to entice you to bring your money. So if the Federal Reserve, March 16th of this year, if they decide to increase interest rates by 1/4%, 0.5%, guess what? You're going to see your local banks and your national banks start increasing their interest rates on those deposit accounts, because now they want to attract more money. Because when they can do that, some people will take their money out of the stock market, because the stock market is volatile. They will take their money out of the stock market and say, you know something, I'm going to put my 100 grand over here in the bank. I can get me a high yield money market at 2%, and I ain't got to worry about losing my principal. And that's why when the Federal Reserve increases interest rates, it temporarily decreases the stock market, just because of that, people pulling their money out. So guys, if you don't remember anything else in this video, remember this: don't be fooled by all the rhetoric you hear. You should be investing every single month through dollar cost averaging. You should be having a long-term investment horizon. You should be buying your favorite companies and your favorite ETFs every single month. Don't get tricked. This is not the time to pull back. This is a trick of the 1%. This is how they stay wealthy and they keep us broke and poor. Do not fall for that. Drop me some comments, guys, and let me know what you think about the strategy of buying the dip on the way down. Let me know what your thoughts are on that. And if you're taking advantage of that particular strategy, let me know how it's going for you. If you want those 5 free stocks from Webull, click on that link down in the description box. Open up your new Webull account today. Get those 5 free stocks valued up to $9,600. Guys, go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.